Getting a credit card without a credit history is kind of like the current job market, where entry-level positions require 3 years of experience. In most cases, you can't get approved for a credit card without a credit history, but it's also very difficult to build a credit history without a credit card. Luckily, there are a few credit cards out there geared towards people in this situation, and we'll go over some of the best options in today's video. First, it's important to understand the difference between secured credit cards and unsecured credit cards. Secured credit cards require you to put a deposit down upfront when applying, usually equal to the card's balance limit, also called a credit line. This basically just acts like collateral for the bank. Say you have a secured credit card with a balance limit of $500. That means that you would have had to put up a deposit of $500 when applying for the card. Say you then go buy the latest Xbox and then vanish and don't pay off your card. Instead of chasing you down and hiring a collections agency to harass you for the missing money, the bank can just take the money that you owe them from the deposit that you put down up front. And even though the bank technically hasn't lost any money on you, if you do this, your credit history will take a huge hit, so it's definitely not advisable. If you're a responsible credit card user, on the other hand, and you pay off your balance in full every month, after a while the bank will give you your deposit back. Sometimes you have to ask them to do it, whereas sometimes they'll just do it automatically. For most people, this will take anywhere from 6 to 18 months. At this point, your secured credit card transitions into an unsecured credit card. You've proven to the bank that you're a trustworthy borrower, and therefore you don't need to put up collateral anymore in order to continue using your card. Most people who have at least a semi-decent credit history and a stable income can apply directly for an unsecured credit card and never have to put up a deposit. As a borrower, there's no real benefit of going with a secured credit card if you can avoid it, because you're just tying up money in the deposit until your card transitions into an unsecured credit card. The only reason someone would have a secured credit card in the first place is if their credit history is either too poor or entirely non-existent to qualify for an unsecured credit card immediately. That being said, you probably clicked on this video because you don't have much of a credit history. There are some unsecured credit cards out there that are more likely than others to approve people in your position. However, you're probably much better off applying for a secured credit card and having to put up a deposit than you are applying to an unsecured credit card that you might qualify for. Getting denied from a credit card is not the worst thing ever. In fact, contrary to popular belief, it doesn't actually harm your credit score. However, every single credit card application that you make will count as a hard inquiry against your credit history, which can negatively impact your credit history in the short term. So if you apply for an unsecured credit card, get denied, and then apply for the secured credit card, you've made 2 credit card applications and your credit history will show 2 hard inquiries. Whereas if you had just applied directly for the secured credit card in the first place, your credit history would show only 1 application and 1 hard inquiry. And if your focus is on building a positive credit history, that can be really impactful. Plus, the unsecured credit cards that you might qualify for at this point are going to charge higher fees, have higher interest rates, and possibly have lower balance limits than most secured credit cards. Without a solid credit history or collateral in the form of a deposit, a bank will consider you a very risky borrower, and they'll squeeze you dry to counteract that risk. Basically, don't bite off more than you could potentially chew straight away. If you have a very limited credit history, apply for a secured credit card, make on-time payments for 6 to 12 months, and then look to get your deposit back and transition that card into an unsecured credit card. At this point in your financial life, the biggest benefit a credit card can offer you is not a low interest rate or travel points. Your credit card's primary responsibility right now is to help you build a better credit history so that hopefully in the near future you can apply for better cards with great rewards and benefits, along with everything else that a positive credit history is good for, like getting an apartment, applying for a loan, or even getting approved during the background check process at a new job. So when evaluating secured credit cards, you want to look at 5 primary things. First, how much of a deposit is required? This will vary from card to card, and it'll also be dependent on your own personal credit history if you have one, and any income that you have. Many credit cards let you choose how much you want to deposit, usually between about $200 and $3,000. Remember, with secured credit cards, your deposit is usually equal to that card's balance limit. So if you put up a deposit of $200, that means you can typically only charge $200 to the card before you have to pay it back. If you can, it's usually better to put up a larger deposit if possible. Not only does it make the card easier to manage because you don't have to worry about paying it off every single time you go to the grocery store, but it's also better for your credit history if you're using a smaller percentage of your overall balance limit. Second, does the card charge fees? There are some cards out there that are worth the fees they charge. For example, the Amex Platinum card, which charges $450 a year, can more than pay for itself if you're an avid traveler. In the secured credit card market, however, I really could not imagine what a secured card could offer that could justify an annual fee. There are tons of secured card options out there, and most don't charge fees, although some do, so definitely make sure you choose one that is completely fee-free. Third, what kind of benefits come with the card? Secured credit cards typically won't come with the range of benefits and rewards that expensive unsecured cards offer, like the previously mentioned Amex Platinum card, but some will give you a percentage cash back or a first-time bonus after spending a certain dollar amount in the first year. Fourth, how long does it typically take for that card to transition from secured to unsecured? Basically, how long does it take for the bank to deem you a trustworthy borrower and return your deposit? Credit card companies usually won't guarantee a specific time frame because it can range from person to person, but some companies are more known for transitioning their cards faster than others. And then fifth, what's the interest rate on the card? I put this one last because if you're a responsible credit card user, this should be a complete non-issue. It shouldn't matter what the interest rate is because you should be paying your credit card balance off in full every single month. That being said, if you're choosing between two identical credit cards except for interest rate, choose the one with the lower interest rate. We always have the best intentions, but you never know what life might throw at you. So, with all the different secured credit card options out there, which ones should you actually consider? I am not affiliated with or endorsed by any of these credit card companies whatsoever. These are just my collective thoughts after doing a bunch of research and talking to people who've personally had these cards. The first card I want to talk about is the Discover It Secured card, not to be confused with the Discover It Cashback credit card, which is the unsecured version of this card. The Discover It Secured card is one of the more common options recommended because it comes with no annual fees and some pretty great cashback benefits. You get 2% cashback at restaurants and gas stations up to $1,000 in combined purchases every quarter and 1% cashback everywhere else. It also comes with a 2 times cashback match, where Discover will match dollar for dollar all of the cashback that you've generated at the end of your first year. So if you earn $500 in cashback at the end of the first year, Discover will give you another $500 on top of that. The other really great thing about the Discover It Secured card, which I think personally sets it apart from a lot of other secured cards out there, is that Discover will perform automatic monthly reviews of your credit history after just 8 months of owning the card to see whether you're ready to transition from a secured to an unsecured card. Many other credit card companies offer very little transparency on the time frame to get your deposit back. So the fact that Discover advertises their policy gives you a clear understanding of what to expect going in. To open the card, there's a $200 minimum deposit. Discover says that your deposit amount is determined by your income and your ability to pay. If you choose, you can always put up a larger deposit if you want more of a credit line to work with, up to a max of $2,500. The one thing that this card doesn't really have going for it is its interest rate. Your personal interest rate will be determined by a number of different factors, but right now Discover is advertising the interest rate at 22.99% APR, which is pretty average for secured credit cards. Again, like I said earlier, if you're diligent about paying off your balance in full every month, the rate could be 100% for all you care. It won't make a difference on the amount that you have to pay unless you start carrying a balance on your card. The next option to consider is the Secured MasterCard from Capital One. Like the Discover card, it has no annual fees, but unfortunately it doesn't have any cashback benefits. It also has a slightly higher APR, advertised at 26.99% currently. However, this card is a great option if you don't have a lot of money to put up for the deposit. You can put up a deposit of $49, $99, or $200, all for a credit line of $200. This is pretty uncommon among secured credit cards, where your deposit usually equals your credit line dollar for dollar. And with the Secured MasterCard from Capital One, if you want a larger credit line, you can offer up a larger deposit up to a max of $1,000. The other great thing about this card is that Capital One will start doing automatic monthly reviews of your credit history to see whether you're ready to graduate to an unsecured credit card after just 6 months of owning the card, compared to 8 months with the previously mentioned Discover card. I feel the need to throw in a third secured credit card into this list just to make it feel more complete, but honestly, the Discover It Secured card and the Secured MasterCard from Capital One are both really solid options for beginners. If you want to consider another option, there is the Citi Secured MasterCard, which comes with no annual fees, unfortunately no cashback or other benefits, and a pretty standard APR of 22.49%. It has a minimum deposit of $200 up to a maximum of $2,500, but I don't think it's nearly as strong of an option as either the Discover or the Capital One cards, because it can take Citi up to 18 months to graduate your card from secured to unsecured. Lastly, if you're a student currently enrolled in a community college or a 4-year university, there are a lot of student-specific cards that you can get approved for without much of a credit history or an income. Banks recognize that as a student, you're much less likely to have either of these things, so it's a lot easier to get approved. They often function just like an unsecured credit card, meaning that you don't have to put up a deposit, and they typically come with better benefits and rewards than most secured cards, like bonuses for receiving good grades in school. Just like secured cards, there are a lot of pros and cons depending on which student-specific credit card you're looking at. So if you're interested in seeing a video on that topic, let me know in the comments below because I'll be more than happy to put one together if there's enough interest. I hope you guys all enjoyed this video. As always, please consider giving it a like for the YouTube algorithm and consider subscribing if you want to see new personal finance content every single week. Thanks for watching, and I'll see you all next time.